Welcome to the Crypto Daily News. This podcast is created by Generative AI. Today is 18th November 2024, and we're diving into the latest happenings in the world of cryptocurrency, blockchain, and Web3. As always, links to all stories can be found in the episode notes. The NFT market is experiencing a remarkable resurgence, with weekly sales skyrocketing by 94% to reach $181 million. This surge is largely driven by a broader bullish trend in the cryptocurrency market. Following the recent US elections, Ethereum led the charge with $67 million in sales, a 111% increase from the previous week, while Bitcoin-based NFTs saw a 115% rise, generating $60 million. Other blockchains like Solana and BNB Chain contributed $45.5 million collectively. The average value of NFT transactions also jumped to 133 ETH, marking an 87% increase. This revival comes after a challenging period, with October breaking a 7-month downturn in NFT sales. Bitcoin's price has reached new heights, recently hitting an all-time high of $93,477 and currently trading around $91,000. This positive momentum in the crypto market is expected to continue influencing NFT sales in the coming weeks. In Bitcoin security news, the OP Vault proposal aims to enhance Bitcoin's security by introducing covenants which impose ongoing rules on fund spending. Proposed by developer James O'Bain, this feature allows for more complex spending conditions, ensuring funds remain protected over time. OP Vault includes practical vaults that simplify everyday use while adding safeguards against unauthorized spending. Users can set up a vault with a monitoring process to recover funds if unauthorized withdrawals occur. While offering benefits like simplified key management, OVault also has limitations, such as fixed withdrawal destinations. The implementation timeline remains uncertain, but future updates may introduce additional security features. The recent US elections have ushered in a significant shift in the crypto landscape, with many pro-crypto candidates winning office. This change is expected to foster a more favorable regulatory environment, allowing crypto startups to focus on innovation. There's optimism about bipartisan support facilitating advancements in digital identity ownership, new business models for creators, and low-cost cross-border transactions using stablecoins. The importance of stablecoins is highlighted, with substantial transaction volumes reshaping traditional banking experiences. Calls for regulatory clarity are growing as global fintech companies like Stripe and Visa begin integrating stablecoins into their operations. Ethereum's future is also in the spotlight, with Justin Drake from the Ethereum Foundation proposing a new Beam chain to enhance the network's staking economics and decentralization. This initiative is part of a broader vision to improve Ethereum's infrastructure and performance. Stablecoins continue to evolve, with discussions focusing on their role in the financial ecosystem. These digital currencies are designed to maintain a stable value, often pegged to the US dollar. The article categorizes stablecoins along two axes, collateralization and centralization, drawing parallels to historical banking practices. Fiat-backed stablecoins dominate the market, making up over 94% of the stablecoin market. The future of stablecoins depends on regulatory developments and the maturation of decentralized lending protocols, with potential to transform payment systems. The potential implications of the US adopting a Bitcoin strategic reserve are explored, with contrasting outcomes. Positively, it could position the US as a leader in cryptocurrency. Negatively, it might signal a lack of confidence in the US dollar. The debate about Federal Reserve Chair Jerome Powell's position is also highlighted, with concerns about institutional credibility and the dollar's strength. Macroeconomist Lynn Alden expressed surprise at Ethereum's poor performance against Bitcoin following the US presidential election. Despite expecting a favorable outcome for Ethereum, the ETH-BTC ratio hit a multi-year low. Since the election, Ether's price has increased by 17%, while Bitcoin surged by approximately 31%. Industry leaders like Consensus CEO Joe Lubin remain optimistic about Ethereum's future, suggesting it could benefit from Trump's administration. The mixed sentiments reflect ongoing debates about Ethereum's long-term viability. That's all for today's episode of the Crypto Daily News. We hope you found these insights into the world of cryptocurrency and blockchain technology informative. Be sure to check the episode notes for links to all the stories we've covered. Join us again tomorrow for more updates and analysis. Until then, stay curious and keep exploring the crypto universe.